What's up, folks? How are you all doing? And welcome to this week's stock market review, where we actually take a look at the overall markets, give you our analysis on those, talk a little bit about interest rates, and of course, real estate, and don't forget Bitcoin too. All right, so May 29th, 2024, heading into June just about out there. Hope everybody's doing good. Al, good to see you here. Any comments you want to put in, feel free to use the comments area in the YouTube presentation here. And I'm going to go through some administrational items and get through that. And then we'll go ahead and take a look at some charts and so forth. All right, give us a like and pass this on to anybody that may be interested in the markets. Love to have everybody here. All right, a little bit on the risks involved in trading. When we do a webinar like this, we do want to cover the risks just to make sure everybody's aware that sometimes people hear that trading is easy. It's not. Okay, it takes discipline. You also have to use very strict risk control. And some of those items, of course, take a while to develop. So approach trading seriously. If you're going to do it actively, learn as much as you can. And of course, we have a lot of material that can help you do that at the traderscoach.com website and the appliedrealitytrading.com website. All right, so what you want to do is fund your account with risk capital. All right, money you can afford to risk in the markets. Don't be putting your rent money in there. So that's a no-no for sure. Make sure you also, on each trade, know your risk going into it. Know where you're going to get out, know what you could possibly lose in the trade, and also possibly win. And you want to keep your winners, try to keep those winners a good 2-to-1 in front of your losers. So for every dollar you win, you want to lose only half a dollar, that type of thing. All right, and check with your financial advisor if we look at any stocks or make any suggestions here. Run by any our ideas, of course, by your financial advisor to be sure they're suitable for you. I don't know your personal situation, and of course they do. And remember, we always deal in a realm of probabilities in the markets, not guarantees. All right, so some books that can help you on money management are there. I've got my new book, wrapping it up this week, folks. The Art of Trading, 2nd edition. Should be out, I think, maybe by late summer. They have to do a few edits and all that kind of good stuff, but I think probably by late summer it'll be out. You can pre-order it at the pre-order price right now, and of course, it won't be charged until it's actually shipped, but it's going to be about 450 to 500 pages in length, so it's going to be a pretty hefty book. I'm excited about it and put a lot of effort in it. And I think it's going to be the best book I've written to date. All right, let's jump in and take a few look at some of the economic announcements coming out for the remainder of this week. We got Wednesday today, May 29th. We got NBA mortgage apps not doing so good these days. Pretty much at the lowest levels we've seen for a long, long time. And they've been that way for quite some time. Couple speakers, that's it. Thursday, we got GDP, jobless claims. What else we got? Pending home sales and EIA natural gas report, petroleum status report, Fed balance sheet, and a few speakers there. Then we end the week on Friday. We've got personal income and outlays, Chicago PMI, Baker Hughes rig count, and farm prices, and that's pretty much it. All right, I'm going to go full screen here so you can see this as best as possible. This is inflation over the last decade, and it's kind of a very neat, whoops, sorry about that. It's kind of a very unique chart in that, let me go back to my PowerPoint here. Whoops, give me 1 second. We've got a problem with my pointer here. All right, let's see if we can't fix that and go back here. Nope. Okay, for some reason that's not doing it today. All right, so I'll just use the regular pointer. All right, so in a case like this, what we've got here is if you go back, you can see what they try to do, what the Fed's been trying to do is keep inflation around 2%. I think everybody knows that. All you do is have to cut the news on, right? So it got up in 2022 to about 9%, and now it's back down to what, 3.4, 3.6. Not quite at the 2% level. So that makes it kind of difficult for the Fed to lower rates because originally they stated they were going to lower rates when they got to 2%. Well, we're not quite there yet. We also have an election year. Okay, so they're trying to keep the markets happy, so to speak. So everything looks hunky-dory. And, you know, we may still see a rate cut before the election. I wouldn't put it past it. Okay, so keep that in mind. Markets have been selling off recently, and we'll take a look at those charts too. So they may do that to spur a little excitement in not only the stock market, but also the real estate market as well. When we look at charts, if you want to learn more about the software that we use, it's on our websites, traderscoach.com. You can go to appliedrealitytrading.com, which is at the banner at the bottom. So you can check all that out on your own, and we have videos on how it works and so forth. All right, so here's the latest chart I did on Sunday. Now, a couple of things I want to point out here, and that is that notice here, boy, it keeps doing that. All right, notice here, excuse me. Notice here that we got close to the target, almost like a double top, but didn't quite get into the target that we're expecting. Now, that doesn't mean we're not going to go back up into the target, and I kind of think we may do that. So we're going to have to wait and see if we take out this bottom here. I think that's going to be really important if we take that out. So we're going to have to keep an eye on that. And this bottom here, of course, is this ledge where you have these two triangular P shapes, which are pyramid trading points. And that's going to be around, if it goes below around 1800, 800. So 1.8, I'm sorry, not 1.8. Wait, now that's not working. Well, I'm just having a whole host of troubles here. All right, let me just, all right, well, anyway, if it goes below this level here, then we have to kind of be careful. That's about 3,700. I'll get more exact on that when I go to the live charts. But in any case, we're going to have to keep an eye on that level, because if we go below that, then that's a more serious correction than one that may reach back into the target zone, so to speak. So we'll keep an eye on that. For Elliott Wave folks, that's a wave 5 target. So that's a major target area on the daily chart, which will represent a top of wave 3 on the weekly. So we'll see what's going to happen with this. I think personally, like I've been saying up to this date, I don't think we're going to see a major top reached until a little later this year. I would be surprised if they let this thing fall apart. When I say they, the Fed, let this market fall apart in an election year. After the election, hey, all bets are off, right? But before the election, I think they're going to do their darndest to keep this market as happy as possible. So we're kind of in this target range. We've come down a little bit since Sunday, so we're in the lower part of this range now. But this is kind of what we kind of want to see the market somewhat stop at some point when it's in this target and head back up. So let's take a look at that and see that when we get to the live charts. S&P has still quite a distance to go before it hits this target. This again is why I'm still bullish on the markets overall. These other indexes, major indexes like the S&P 500, have not yet gotten as close as the Dow to the top. And we can also see that in the NASDAQ too. So the NASDAQ's got a little ways to go before it gets in between those two target blue lines. So in the NASDAQ, we're talking a range around 17,530 up to 18,957. And as of Sunday, we're at 16,920. I think we're a little lower today. But in any case, on the S&P, that range is 560.52 to 69.88. All right, so we're kind of getting up there, but we're not quite there yet. So that causes me a little bit of a take back, thinking that the top is not yet in. All right, on Bitcoin. All right, so it's starting to move off its corrective bottom that occurred really back in April, about a month ago. And we've got green PTFs across the board. But the issue here with this is that we've got to turn this blue colored pyramid trading point green for my confidence level to go way up that we're not still in a corrective phase in Bitcoin. And if you notice here, we've got an ABC correction, so it looks complete, but there are also things called complex corrections. And so we may be entering that in Bitcoin, but if that pyramid trading point turns green, then I think we're probably off to the races going for that new high. So my target for Bitcoin is around 86,400 to 105. And everything looks like it's cleared the way to get up there. And so, I would basically, if you're in Bitcoin now, I'd hold it. And when we get up to that target, then that might be a place where you can make a decision, especially if you're an active trader, to go ahead and dump it. So when we get to that, we'll take a look at it. All right, in the real estate market, we still have the Case-Shiller index popping higher above the CPI. The Case-Shiller, of course, is our red line on here, and the CPI, which is the Consumer Price Index for inflation, is the black line. And you certainly can see, if we go back to the 1970s, real estate's been an excellent investment in terms of keeping your head above the inflation. And whenever it bubbles far away from the CPI, that's usually a bubble in the real estate market. And so, as you can see now, we're twice as far away as we were during the financial crisis, starting in 2006, extending all the way over, 2008 before it busted, and then all the way down to around 2011-ish before we saw some type of rebound, maybe 2012, right around that ballpark. So I'm concerned about real estate in terms of it keeps going up, but bubbles can last a while. It was back in the financial crisis. It was about 2 years before we saw it really start to pop to the downside. So we'll see what happens with that. But all things point to be careful in the real estate market for sure. All right, mortgages are around 7.17% these days. And of course, that fluctuates weekly, but that's kind of where we are now. It was coming down, and now it's kind of turned back up recently. And in terms of home prices, you can certainly see we're pretty much up around 4% from last year, 6.6% versus the median asking price. So the sales price of the actual sale price versus the asking price is about 2.6% different. So you're not seeing any overbidding anymore, that type of thing. Inventory's increased, but demand is not. All right, demand is still low, so transactions are not that high still in the real estate market. All right, so let's come out of here. All right, and let's go over to here. And let me just bring up my data window box back over there. All right, let me get off the NASDAQ here. That's for our day trading situation, and take a look at the Dow. All right, so here's this chart on the far left, which is causing me a little concern now, because on the 60-minute chart, which is this one here, where I'm really got the nice, remember that nice area for profit taking, and we should see a bounce off. We're not seeing that. All right, it blew right past it. So now we got to keep an eye very closely at this level here. And that's this level down in here that I was talking about before. So we're talking about really a price in that level of a low of 37,810. All right, so 37,800. If the market goes below that, that's not a very good sign, so to speak. All right, now we have another, that means we're probably going to go into this target zone here, 37 to 35. So we're going to keep an eye on this. But I was hoping we'd see a double bounce and get one more time higher. So we're going to watch. And again, if it keeps on going down past this level, then we got to watch the bottom here. And then if it goes down there, we're probably in the meat of a big sell-off at that point. All right. Did we come close enough to the target? Well, I guess kind of, right? We're really just almost kissed it. Didn't quite go in it. So we could see a major sell-off from here. Again, I'm skeptical on that right now. I'd have to see some more follow-through big time to the downside before I really say that that's what's occurring. So my forecast is still, overall bullish, at least to the election year, unless we start taking out these levels that I've indicated on the chart. So we'll see what happens with that. All right, now On Bitcoin, I do want to take a look at Bitcoin real quick here. Let's go over to that because that's kind of getting in a very interesting situation as well. So on the Bitcoin level here, I am waiting for this blue colored triangular pyramid to get hit. This is one of our software studies that indicate that the trend is emerging, and this would be what we call a P pyramid. So that would be significant. Notice this one's a minor pyramid, and so we want to make sure we get a P one before we actually get some confidence built that we're going on up to that target level. So we'll see what happens. Now, if prices dip below the lower part of this pyramid and never gets above here before, then that pyramid's going to disappear. So what I'm concerned about here is this going into a complex correction. Now, what we've got here already is we've already got the makings of an ABC. So A, B, C bottom. So we've got that in place. And, we've got green PTFs across the board. So my thoughts is that, again, from a probability standpoint, I do not think we're going to go into a complex correction, but it cannot be dismissed totally. So you have to keep that in mind. So my feeling is that Bitcoin will recover, go higher, and eventually then get up to its target zone, which is that 87,000 range to 106. And then that's going to be a significant top on the weekly charts. And I'm going to get out there. Okay, that would be an area that I would want to get out, let it go into a more longer term correction after that cycle, and then look to get back in quite a bit of maybe 6 months to a year from now once we reach that top. So that's kind of what I'm thinking on Bitcoin. If you're a super long-term investor, you bought some for your kids and you're just going to put it under the pillow and hold it, that's fine. But don't be worried about these big cycle swings that can occur in the coins, okay? Just, keep it and see how it turns out in 10 years. Don't bet the farm on it. A lot can change in the crypto market. But for us active traders, for at least for me, I'll be looking to get out in that range there. All right. Now, the other market I want to look at here, and there's a couple, is USO. All right. USO is the ETF for the oil market. My target for oil is still at around 99 to 125. Okay. So up in that range there. We pulled back to an area. It looks like we found some stability and we're heading back up. So again, if this continues on up and gets above this level here on the weekly chart, which is a high of 83.41, all right, then that's probably a good sign that we've broken out of the weekly channel and we're going to head up pretty quickly to that target. So we'll see what happens. We've got a green PTF there on the 60-minute. So I'm kind of thinking that maybe we have a nice bottom here, ended right in the target zone, and we're heading on up. So I would anticipate oil prices now escalating, going up for the remainder of the summer. So we'll see how that certainly turns out. All right, UNG. Now here's another interesting one. This is the ETF for natural gas, okay? This one has done a nice turnaround off its bottom here at 14. And so it went up quite dramatically. It's not done yet. It's going to be pulling back. Let's just get an idea of where the pullback could be. I think we're probably close to it now. And, we're in it now, but it's not turned around quite yet, still coming down. And so now we'll just wait and see. What I'm also waiting for is a couple things. We no longer have any short pyramids active on the weekly, and we still have a red momentum owl, which is this indicator over here on the weekly, still red. I'd like to see that go green. And if we do, then my target area is around 46 to 66 on this. So quite a bit higher. And I think we should see if this thing is, if the bottom is in here for the wave 3 on the weekly chart, we should see a turnaround in this by about 17 bucks. So we're at 18.41, could slide down another $1.50 before we see a turnaround. So definitely keep that in mind. All right, silver. I want to take a look at silver. This is one that, bounced out of our triangular pennant a while back. I guess you can see it here on the weekly chart. And we're still bullish on this. All right, but we are in a short-term target right now. So we could see a little bit higher prices short-term, then a pullback, and then higher highs. So I think silver is basically now broken out of its long-term stagnant channel that it had been in from, for gosh sakes, around 2023 to right about, this year, middle of this year, like around April, it started bouncing out. So I'm pretty sure this is now going to continue up. So if you're holding silver, you're probably going to be pretty happy. And I would expect this to get back into the, 30 range pretty quickly here. And I think it looks like a pretty good hold for a while. Okay, long term, I'm expecting this to go much higher. All right, on gold, GLD, let's take a look at that. All right, and on gold here, again, this one also doing extremely well. And what we have here, though, is a change in the PTF. So notice we had a green PTF here on the weekly. All right, we still have an active pyramid, but it's turned yellow. We have it yellow here, and we have it red here. So we're in a pullback area that looks like it's not quite over, and I would anticipate maybe that this will go red. Now, notice we've had the hook. We've had the little bit of a bubble here for bearish divergence. We're still in 3 here. So what I think is going to happen here, we're going to go into a 4 at some point, like real soon, before it probably makes any more highs. And then it's going to turn around and make a high. So if you're thinking about getting into gold, you may want to wait a little bit until it gets down about another 10 points or so. All right. And then I think it probably will be a good buy again. If you have our software, which many of you do, I know out there, just wait until the 60-minute chart on the far left gets more bullish, because you see there's still quite a bit of red there. So let that be your guide as to when to jump in for a long trade, when all that red goes away. Okay, so that's kind of the way I would work that. All right, so we've covered gold, we've covered silver, USO, natural gas we've covered. And don't forget, we have stock analysis Friday on tomorrow already. So bring your individual stocks there. We'll have plenty of time to look at those. But I did want to, talk a little bit now about interest rates. So what do you guys think about interest rates? Let me hear what the synopsis is out there from everybody listening. Do you think we're going to get a quarter point before the election? Do you think they're going to stay flat? What do you think is going to happen? I'd be very interested to see what folks think out there. I think we probably could see a quarter point, especially with the market selling off, a quarter point at some point. Okay. Oh, I'm sorry. Gene's right. Stock analysis Friday is not tomorrow. It is on Friday. Right. Yeah, Memorial Day screwed up my calendar for the week, right? Okay. All right, so flat. Al's thinking flat. No more rate decreases at all before the election. Okay, Marone, what do you think? I see you out there. You're usually pretty good with this interest rate stuff. Let me know what you think out there. Jim, what do you think? Don't be shy. They definitely have not gotten it down to the 2% level, right? So that's kind of interesting. It backs them up against the wall a little bit on what they're going to do. All right, Frank. Hello, Frank. Is Frank staying flat? Jim, about a quarter point. Yeah, I think so. I'm kind of with you on that. Anybody else? Well, anyway, feel free to chime in on what you think here, because I don't think they're going to raise rates, put it that way. But I certainly think it's either flat or a quarter point. And I don't even, if it wasn't an election year, I don't know if I would say a quarter point. But because it's an election year, I think they might do the quarter point to the, drop it. the market's been selling off quite a bit. It's currently down at 345 now, roughly, all across the board. All right, interesting. All right, well, that's what I got for you today. Okay, so let's see what happens. I'm going to go back to the Dow for just a moment before we end here, because I do want to take a look at that. So let's go back to the Dow and take a look here. And again, I think what we have to do now, we're blowing right through this fib level here. Let's watch this level here. So for the remainder of the week, watch that lower level. And again, that level, that price is approximately 37,810. So if we get below, let's say 37,800, if we get to 37,800, then this is probably then going down into this target here, which is a little bit longer term target than this one. And that's 37,142 down to 35,303. So this one's got to hold for us to get any type of bounce back up. So we need to see a turnaround pretty soon on that. All right, so that is it for the week. Have a great one, and we'll see you back here next week. Thanks so much. And let's see what else. Any other last minute comments coming in? Yeah, Gene, I'll pop that up because you're so right. Give us a like today. All right, Frank saying 40 trillion debt is around the corner. All right, and yeah, amazing, right? Incredible. All right, it's amazing to me the markets haven't already imploded, honestly, but they are staying up there for sure. Same thing with real estate. I mean, real estate's amazing that it is staying as lofty as it is. Now, not many sales are coming. And when the sales are coming, like I said before, the prices are coming down a little bit according to the stats. So there we are. All right. Thank you, everybody. We'll see you back here next week. I'll put a little music on, and then we'll go ahead and close the room. For those that are coming to client support in just a little bit, we will see you soon. Take care, everybody. See you next week. Thanks.